The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Geopolitics re-enters the room and investors re-enter that safety trade. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Scarlett Fu. We're counting you down to the closing bell here in the U.S. Let's take a look at how things are going, because what a start to the fourth quarter, right? You've got fears of an escalating Middle East conflict. It has triggered a risk-off crouch. Having said that, the S&P 500 has come back from its worst levels. At one point, it was down as much as 1.4%, the biggest decline in about 3 weeks, with tech leading the slide. On the flip side, you've got almost all of the energy stocks in the S&P 500 higher, 21 out of 22 names, as oil prices spike as Iran fired off rockets at Israel. We've seen NYMEX crude come back a little bit here. It did get within 6 cents of $72 a barrel. U.S. Treasuries rallying, led by the 10-year. You could see the 10-year yield dipping to 3.74%. It did dip below that level at 3.7%. And gold futures at a record high. Gold at $26.82 at the moment. Romaine?
The spike in oil, that spike in the VIX, the spike in gold, the spike in Treasury prices really reflected of this safe haven trade, dominating the tape here on a day where the Middle East conflict is once again dominating the headlines. Israel's campaign against Iran's network of proxy militias, drawing Iran itself into direct military confrontation. You see that on the screen as missiles fly from Iran. We've seen that as interceptors fly from Israel. Damage on the ground and loss of life so far minimal, but investors remain rattled. The flare-up in the Middle East, injecting a bout of volatility into what was a previously sleepy financial market. One gauge of implied volatility in Brent crude, now at the highest in a year. Equities in the U.S. sliding the most in a month. A small handful of gainers today, concentrated amongst energy and defense stocks. The biggest selling, though, that's coming in the names with the highest multiples, and this is exactly what Wall Street strategists had warned just weeks ago. A softening economy leaving pricey equity valuations exposed to any sudden exogenous shocks, geopolitical or otherwise.
All right, let's take a look at oil, because both Brent and WTI were actually higher before the missile strikes. They climbed to session highs, up 5% once the headlines did cross. The direct involvement of Iran in the conflict could increase the possibility of oil supply disruptions in the region, given that Iran is the world's 9th biggest oil producer. Analysts say that this new chapter of the Middle East conflict marks one of the most significant threats to oil supplies globally since Russia's invasion of Ukraine. And the other thing to remember here is, in terms of positioning, speculators have been piling into bearish bets in the lead up to today's attack. So that was on concerns about weakening demand, but these short positions really leave the oil market vulnerable to quick spikes like the ones we saw today if those bets need to be unwound very quickly.
And here's what we know right now. Both Israel and Iran confirming that at least tens, in their words, of ballistic missiles were fired onto Israel. Israel was able to intercept some of those missiles, though there has been some damage. We're also getting reports of a shooting in Jaffa. At least 6 people dead right now, based on what we know from Israeli forces. Here in the U.S., National Security Advisor Jake Sullivan saying that the U.S. military did coordinate with Israel on those counterstrikes. Dan Williams is our Bloomberg reporter on the ground in Jerusalem, and he joins us right now. Dan, how much more is going on?
Well, for now, this extraordinary event seems to be over. The Iranians put out a sweeping statement about what appears to have been the launch of 181 ballistic missiles at Israel over the space of around 30 minutes. I counted 25 explosions of interceptions just over Jerusalem alone. And keep in mind that there were sirens going off all over the country, as far north as Haifa, as far west as Tel Aviv. The Iranians appear to have drawn a line under this event, saying that this was their revenge for 3 high-profile recent assassinations carried out by Israel, 2 in Beirut, 1 in Tehran. For the Tehran one, Israel never took credit, but it's widely assumed to have carried out that assassination as well. And it would appear that the Israelis themselves are in no rush to retaliate. The official statement is that Israel will respond at a time and with a method of its choosing.
Do we have any sense here as to what the potential target could be? And Dan, by what I mean by that is what country should expect that retaliation?
Well, given that Israel previously said that any attack by Iran on Israel would be answered with an attack by Israel on Iran, I think Israel has pretty much committed itself to striking Iran. Now, if we want to look at a precedent, we could look at April 14th, when the Iranians fired something like 300 projectiles, around 100 of them ballistic missiles, at Israel. Israel's retaliation came a few days later, and it was very low signature. To my knowledge, Israel has yet to claim responsibility for it. Apparently, some stealthy device, a projectile of some kind, was used to knock out a strategic radar near a base of great importance, a military base of great importance to the Iranians. That's according to various media reports and various indications we've received privately from Israeli officials. That was a pretty restrained response. I don't think Israel would be so restrained this time. However, if Iran genuinely sees this as a one-off retaliation covering 3 assassinations, basically revenge for 3 assassinations, this may be a signal that Israel need not pursue escalation right now, and it can continue focusing what appears to be its current area of interest, which is Lebanon, southern Lebanon, and Hezbollah.
Dan, what do we know so far about the damage or the extent of damage in Israel?
So far, we've heard of property damage in Israel. The interceptions appear to have been very effective, and some of the property damage may actually be a result of debris from successful interceptions. There is, sadly, one fatality, a Palestinian, in the West Bank as a result of that Iranian salvo. It's highly doubtful that's what the Iranians intended. However, given that they're firing ballistic missiles, a volley from a distance of some 1,200 kilometers, this really was rather a scattershot attack. There's only a degree to which such weaponry can be expected or claimed to be precise at those ranges.
Compare and contrast the damage then to what we saw in April when Iran also attacked Israel back then.
Back then, the Israeli account was that of 300 projectiles, only 4 got through. One caused some damage to an Israeli airbase in the south around one of the runways, and a girl, I believe she was 10 years old, suffered a serious head wound. To my knowledge, she was hospitalized. She has since been released from hospital. So that resulted in one serious casualty and perhaps some mild casualties from people rushing to shelters and so forth. But Israel has a very finely honed early alert warning system. It has a very advanced interceptor system that works at various altitudes with various fail-safe guarantees that if an incoming threat is missed on the first round, it can be tackled again by a different system. And it's worth noting here that the Israeli defenses are also synchronized. They're interoperable with U.S. defensive systems and indeed defensive systems fielded by other U.S. partners in the region, Saudi Arabia, Gulf Arab countries, for example. So really there is a region-wide architecture here that has allowed Israel, certainly in April, and apparently this time as well, to fend off the vast majority of these long-range attacks.
Dan, can you give us a little bit of sense here as to exactly what is going on the ground out there? I know everyone was told to take shelter hours ago. It's after 10 p.m. there in Israel where you are, and I know you are inside, but are people actually out on the streets or are they deserted?
There might not. It's worth remembering tomorrow is a Jewish holiday. It's the first day of the Jewish New Year. It's a major holiday season for Jews, so you'd imagine that a day before there'd be people doing last-minute shopping and the like. I imagine there are fewer going out there. However, it's worth remarking that within seconds, basically, of Israel sounding the all-clear about this salvo being over, you could hear buses resume their courses in the streets. You could hear people going out, cars, neighbors, and the like. So it appears that Israelis have recovered quickly, and there's probably no surprise given that they've been on a war footing since October 7th, since that Hamas attack on their southern communities and army bases that set off this really unprecedented war. It began with Gaza, but the next day Hezbollah from Lebanon joined in with attacks on Israel. It's since evolved into what Israel calls a 7-front war with attacks on Israel and responsive Israeli strikes in places as far-flung as Yemen and apparently Iran, Syria, Iraq, and the like. So Israelis are used to these sort of attacks, perhaps not of the volume, and I mean volume both in terms of the number of missiles and the sheer noise created by the explosions and the jet rush of the interceptor missiles being fired to intercept them. These are very, very sophisticated, expensive, large interceptors. They cost about $3 million a pop, and they're actually designed to intercept ballistic missiles in space such that the war can be destroyed safely above atmosphere. Israelis are used to this, but I'm not sure they will miss it once this is behind them.
Dan Williams, really appreciate your joining us today. Dan Williams reporting from Jerusalem, and of course we'll be checking in with him in the days coming. Here with more context on the broader geopolitical implications is Adnan Mazarei. He is non-resident senior fellow at the Peterson Institute for International Economics. Adnan, you heard our reporter on the ground kind of give us the lay of the land right now. I'm curious to hear from you whether you think if today's attacks were mostly intercepted and the damage was fairly limited, like April's attack, whether today's attack might just become mostly a symbolic attack more than anything, like in April.
I am not sure these things can be contained. The logic of these interactions is such that they could easily get out of hand. Okay? The region has already been suffering considerably since the start of the Gaza war, especially Egypt, Lebanon, and Jordan. Mm-hmm. Now, with this uncertainty and economic pressures will increase. Importantly, social pressures and poverty will increase in all of these regions, in this region, and also in the broader region, including in the Gulf countries, economic activity will become more difficult. Now, what are the geopolitical implications of this? It is likely that these will deepen the geopolitical cleavages and pressures. It will likely make the global south, or the so-called global south, become more distrustful of the global economic and political order.
Mm-hmm. In terms of U.S. response, Jake Sullivan, the National Security Advisor, talked about how we've made clear that there will be consequences, severe consequences for this attack, and we will work with Israel. What will you be watching for and listening for from the U.S.?
Look, it is widely believed in the region that this is in many ways a joint Israel-US conflict against the Palestinians, etc. This will exacerbate those kind of reactions. It is important for people to step back and remember what is going on is not the way the Palestinians, the Israelis, the Lebanese, the Iranians, or anybody should be living. And for efforts to be put in place immediately for ceasefire and from a broader multinational framework to bring peace and also to some settlement of the Palestinian issue, which is at the core of the current conflict.
The core of the current conflict, of course, a conflict not only not resolved, but a conflict, of course, that now appears to be escalating. Adnan, we really appreciate you taking the time for us. Non-resident senior fellow over at the Peterson Institute for International Economics, as we stay on this story and we stay on the market reaction to it as well. Geopolitics, once again, front and center for investors. Let's bring into the conversation Jimmy Chang. He's Chief Investment Officer over at Rockefeller Global Family Office. Jimmy, thanks for being here today. And with the caveat that we know you're not an expert on Middle East affairs, you are certainly not unfamiliar to how geopolitics affects the investor psyche and affects investment planning. When you have something like this that for a lot of people was a surprise, what is sort of the first thing that you look to in terms of telling your clients, your colleagues, your peers to do next?
Well, the important thing is to separate the noise from signals. Mm-hmm. And I think unfortunately, or perhaps fortunately, and I don't mean to sound dismissive, the markets have been conditioned in the last few years to react temporarily to these issues. They will bid up safe haven prices, gold, oil, treasury prices. But then as soon as they get the all clear signal that things are under control, they'll put it behind them and go back to whatever they were doing. So long we don't get further escalation in the coming days, I think the market will look past it. Now, one of these days, it will be proven wrong, because I do agree something has to get worked out in the long run, and the conflict seems to just be escalating.
I am curious about the cumulative effect of various sort of wars and other conflicts. Obviously, you have what's going on between Iran and Israel. Obviously, the Ukraine-Russia war continues to go on. You have other big geopolitical disruptions going on around the globe, not to mention a changing of the guard in terms of presidential elections around the globe that are really going to reshape foreign policy. This is much different right now, what we're seeing, than maybe what we've seen in past cycles here. How do you adjust?
I think you want to weigh the different issues. I think at least in the near term, I think the bigger catalyst is the U.S. election. If you have a Harris administration with a Republican-controlled Senate, that will be viewed as largely status quo. If you have a Trump victory, I actually think that's going to be very disruptive as far as the foreign policies, pertaining to the war in Ukraine, support for Israel, whether it gets, more assertive, and also the tariffs issues. So potentially the election can turn out to be more disruptive.
In terms of just the U.S. markets and how they respond to these exogenous events, I think about what happened with China, the week-long stimulus package that they announced, and how little impact it had on the U.S. market overall in terms of lifting sentiment and really inspiring people to go outside the U.S. And then you have the news today with Iran attacking Israel. And yes, there's certainly a movement in stocks and in oil, but if in the long term people are going to look past it, what is it about the U.S. market that has its participants looking inward as opposed to digesting the headlines from outside?
I think over the last 10 plus years, investors have been conditioned to overweight the U.S. So we tend to dismiss what happens overseas. In fact, you hear a lot of people saying that China is just uninvestable. And then last week, we get a sudden surprise with the pretty strong stimulus on the monetary side and also the PBOC lending money to companies and investors to buy stocks. So you get a nice pop in the Asian market. So temporarily, that could mean outperformance by emerging markets. But again, the election could be disruptive because depending on the tariffs policies, right, that can again disrupt the emerging market rally.
How much are you seeing your clients ask you about the election? Because you point out all these different scenarios, but we might not get an answer until as late as January.
Most people are obviously interested, but we tend to have a very long-term view. So the strategic allocation has not been altered. In the meantime, tactically, you could play out a different scenario. So for example, if you have a blue sweep, I think the market will probably view it as somewhat negative for equities and positive for bonds. If you have a red sweep, that's potentially more inflationary, so it's negative to bonds, but then equities may do well on the belief of deregulation, potentially lower taxes. If you have a slick government, it's probably muted impact.
I am curious, though, we talk about some of the tailwinds for this market heading into this election. Interest rates finally coming down, an economy that's at least doing better than I think what people had anticipated here. No matter what the outcome of that November 5th election, is it possible that those tailwinds could outweigh any potential negatives we get from the election itself?
Right now, the thesis is synchronized global easing, with the exception of Bank of Japan. I counted in September, we've had 25 rate cut announcements across the globe. So people will
Since September, 25?
25 across the world. So that's the thesis. But then if you have a Trump victory, potentially driving up inflation with new tariffs, potentially higher economic activities, would that then disrupt the rate easing, the interest rate cutting cycle that the market is pricing in? So I do think potentially there could be some risk to the Treasury market.
Are you concerned at all about some of the other risks that have been bubbling up? We have a port strike that just started today that could have significant economic consequences should it drag on for weeks rather than days. We have another strike over at Boeing that's still unresolved, as well as a lot of other issues that have the potential for an inflationary impact as well as an economic impact.
Yes, I do agree. These are really good points. Depending on how long they last, there is an impact on inflation, and that could potentially disrupt the market's complacency about the interest rate cutting cycle. And at some point, inflation could still make a comeback once everything settles down, especially with central banks being so aggressive on the easing side.
As much as you say that investors are conditioned to look past these headlines, these hiccups from overseas, are these latest headlines enough to at least derail or snuff out the bull market? I mean, are we done with making new record highs?
Well, given that we've done so well in the second half of September, so a little bit of pullback is normal. I don't think it's enough to really derail the bull market. So anything, maybe a 5% pullback, and then the focus in 2 weeks will be on the earnings season and then the elections.
All right, Jimmy Chang, really appreciate your joining us as always, giving us some much needed context to all the moves today. Chief Investment Officer at Rockefeller Global Family Office. Now, we mentioned earlier how oil prices are on the march higher, with WTI currently up 3% at $70.27 a barrel. Here now with some perspective on how the energy markets are affected by the tensions in the Middle East is Stephen Schork. He is principal and editor at the Schork Group. Stephen, we talked a little bit earlier about how oil prices surged as much as 5%, but they've backed off a little bit here. What's the thinking behind oil prices surging but then coming off a little bit here? Is it because of the headlines that perhaps the damage was less extensive than had been feared?
Possibly. We're looking at a market that has been supremely underestimating the potential for all-out war in the Middle East. We are now coming up on the one-year anniversary since Iran, via its proxies, Hamas, Hezbollah, and the Houthis, declared war on Israel specifically and the West in general. Now, we saw a spike in implied volatility this time last year in October when the war began. But volatility was halved from about over 40%, and it lulled in around 20% back in July. This is clearly the market not pricing in a risk premium. So all year long, the market has underestimated the volatility and have refused to price in a risk premium. Now, since about the third week of September, that risk premium has increased. Volatility has increased, implied volatility is increased by about 50%. But still, we're looking at a situation here in the Middle East where war is hotter than ever, and oil just continues to trade on a headline like it did today, but we are well off the highs. So clearly, traders are still taking a look-see that things will quickly resolve. I'm not in agreement with that, but I have to respect what the market action is right now.
Talk a little bit about market positioning heading into today's attacks. There was a lot of bearish bets, and as a result, we did see that pop, perhaps a short squeeze. But I'm wondering where that leaves us now in terms of positioning.
Yeah, absolutely. We've been since about the past 3 months, especially in the ICE Brent crude oil market, which is your benchmark for the global oil market. Hedge funds bet massively wrong at the beginning of the summer. They were extremely long, and they've been exercised out. So you have a lot of money that has been lost or money that has moved to the sidelines. So there still is plenty of ammunition, money to throw at the market should we see any significant disruption. And this is the key. It's a disruption to oil. And this is also the conundrum, because we now have vessels, oil vessels, that have to avoid the Red Sea, that have to go through longer transit routes because of the Houthi attack on shipments in that area. And yet, despite that disruption to supply, markets refuse to react. So the market is going to continue to trade on the headlines regardless of the positions, but we have to keep in mind we must see a disruption in the flow of oil, which we have yet to see. So the market's reaction today, spiking on that original headline of the missile attack, but now quickly pulling back. Unless we see a disruption in the price, this will be an opportunity for speculators to sell into, because the game plan has been over the past year, it's buy into the rumor and sell the fact. The old adage on Wall Street, right?
Yeah, absolutely, Stephen. And you have to sort of overlay this where we are right now in the demand side of this picture here, because I thought that was, at least in terms of keeping prices more stable, that was actually a little bit more favorable, specifically from a price point.
Yeah, absolutely agreed. And this is what I'm kind of perplexed on, the dovish stance that OPEC has taken, i.e. it's going to continue to look to increase production or not cut back on further quotas. Now, the spread market, that is, when we look at terms, price along the term structure, the forward curve, whether we're talking about NYMEX WTI, ICE Brent crude oil, or Oman, the Dubai marker, the spreads are telling us that the market is clearly, at this point, well supplied. So it is a demand issue. And that demand issue has been China. And that has been the story for the past 3 years. China, economic growth, that is going to be your driver for higher oil prices. Well, it's been 3 years. China, we're waiting for Godot. And as we know, Godot never shows up. So there are serious doubts, especially when we saw the stimulus that China put forth, that economy is in trouble and it remains in trouble. And that will certainly hang on the price of oil, i.e. from a demand standpoint. So on one hand, we have the supply issue, which is what we're talking about now, with potential escalation of war, a physical war now between Iran, Israel / the United States. And on the other side, we have the demand side. So whoever's going to win, but clearly demand issues or supply issues should be sold into, because these appear to be, again, judging by how this market has reacted for the past year, short-lived. And the overarching story tends to be a slowdown in economic growth and therefore a decrease in demand led by China.
Is there sort of any buffer this time around if we do get a major disruption in oil, with the caveat that, let's face it, Iran really shouldn't be selling anything to begin with. But if there is a major disruption, has Europe insulated itself? Has the renewable energy boom here in the U.S. insulated itself from any sort of further shock?
No, absolutely not. The renewable energy boom here in the United States has been an absolute detriment to energy independence. We've drawn down 250,000 barrels of the Strategic Petroleum Reserve only for political reasons. And as we've learned on the power side, the regulators, PJM, FERC, so forth, are telling us renewables cannot replace the amount of dispatchable BTUs, coal, nuclear, and natural gas that have been codified, that are being taken off the grid. So the United States is absolutely in a very dangerous situation because the renewables are not ready for prime time. They're not getting to the market fast enough. PJM, the regulator, the largest RTO in the United States, is telling us that renewables aren't there. So the United States is extremely vulnerable now if you do see a significant shortage disruption in the flow of hard BTUs.
All right, Stephen, I have to leave it there. Stephen Schork over at the Schork Group here. A discussion here about the energy part of the equation. WTI crude settling just a little bit earlier, right around 69.83. The new session trading above 70. We continue on this story, and we continue on some of the disruptions, the potential disruptions to the market, including a strike at the nation's East and Gulf Coast ports, a strike that could have massive economic implications. Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Scarlett Fu. And we've seen the first day of the fourth quarter kick off with flight to safety. It's been a risk-off trading day, although stocks have come well off their lows. At one point, the S&P 500 losing about 1.4%. It's cut that in half. Yeah, off the lows of the day, but kind of interesting to see that spike in volatility. We saw that, of course, in the VIX, but more importantly, we saw that in the commodities space here. And I think that's where some of the real concern is right now, that if this does end up being sort of a protracted, we'll call it a military campaign between Israel and Iran, what the reverberations could be on oil supply, energy supply as well. And of course, you've got the disruption from the strike taking place at East Coast and Gulf Coast ports along the U.S. The global shipping sector really getting slammed today after dockwalkers walked out of every major port along the U.S. East and Gulf Coast for the first time in almost 50 years. They had failed to come to terms on a new 6-year contract. According to J.P. Morgan, this strike could cost the U.S. economy up to $4.5 billion a day. Here now with more analysis is Jason Seidl. He is analyst and managing director at TD Cowen. And Jason, your area of coverage includes the logistics companies such as FedEx, such as UPS, along with the railroad companies as well. Jason, what do you hear from your initial checks, your initial channel checks? What kind of sense are you getting in terms of the duration of this strike?
Sure. So I think it helps to put this all in the context. If you go back like 3 months, most people thought that there never could be an East Coast port strike. And then it started developing into, well, I think it's going to be a quick strike, maybe 24 to 48 hours. And now I think people are even pushing that out a little bit more. There's a lot of things that are coming into play here. There's presidential politics. There's union politics. The administration really has to be careful here and try to thread the needle between making the unions happy and then also making sure that they don't tank the economy in the process. We're looking at it right now as we think that the strike can last up to a week. But if we get more, that could be bad news for the economy.
To what extent is the port strike fully priced into the companies that you cover? Because I think about how people had a similar reaction when the Boeing machinists walked off the job in the Seattle area. They're all saying, oh, this will last a day or two. And now we're more than 2 weeks in.
So I really think it depends on who you are, right? For example, so if you're one of the middlemen, if you're an Expeditors or a C.H. Robinson or an RXO, actually you might stand to benefit a little bit here. This is sort of one of the underlying value propositions as to why you use the middleman if you're a shipper. So when there's any disruption in the marketplace, you tend to flock to them. So people like that can actually stand to benefit a little bit. I think where it comes into play, where if it starts to push down the amount of volumes of freight coming into the North American network in the fourth quarter, then I think it could pose a threat for everyone.
Well, that's what I'm curious about. I mean, we've had sort of a victory lap, if you will, of some of the West Coast port operators on this network, obviously expecting to get some increase in business should this drag on here. But we always forget it's one thing to sort of get that ship into a port. It's another thing to get it unloaded and onto the back of a truck or a train. There are capacity issues that were already in place prior to this. And I'm wondering if there's any sort of hope that those capacity issues would be resolved in order to deal with any sort of increase in shipments.
Well, let's talk about the West Coast for a minute. If you really look at some of the numbers, they've been seeing some record volumes out in the West Coast. So I would actually argue that there's been some shift to the West Coast by some of the people in logistics already. Now, some of it obviously occurred from the Canadian rail strikes, but others are people were anticipating this happening in the marketplace and just trying to protect their own supply chains. Now, we had Gene Soroka on the other day on a call. He heads the Port of LA. Right now, they have about a 20% excess capacity there. That's our largest container port in the United States. So if stuff needs to get moved, if this goes further in duration than we originally had feared, then I think the Port of LA can handle some of that. I don't think the Pacific Northwest ports are in the same predicament as a good predicament, if you will, as LA is. So I think they're a little bit tighter up there. And if we go beyond 2 weeks, then we're going to start having shippers look to north, probably to the Port of Vancouver, the Port of Prince Rupert, ports like that up in Canada.
Well, I am curious about that, too. I mean, we are headed towards the holiday season here in the United States, and a time, and at least when you look at typical shipping times, this is kind of the meat of the season where a lot of that stuff needs to get on a boat and get over here. I am curious as to whether the consumer, the end consumer, should anticipate that when they go into these stores around Thanksgiving and Christmas, that there might just be a little less inventory, or are we stocked up already?
Now, let me allay some of the fears here. Most of the peak season shipping has already been done. So I don't think Christmas is in jeopardy for anyone out there. Now, might there be some things that are a little bit lower stocked than we like? Yes. But in general, I think the supply chain is okay. Where we have to start looking at the supply chain is when you look at some of the perishables, some of the produce. Those are issues that we're going to have problems with going forward. Things like bananas. And then also the automotive sector. Autos coming in. We have to worry about some of the supplies there, too.
Jason?
Yes.
Sorry, we lost you for a moment there. You were talking about how the produce could be an issue.
Yes, no, what I was saying is I think the produce is going to be an issue because these are things that can't be stored and then reshipped, right? If you think about bananas, you ship bananas when they're green and then they ripen a little bit and then they arrive. It's not like we can, sit there with a ship of bananas off the port of New York, New Jersey for 2 weeks and have everything still be fine. So I think on the produce side is where you stand to have some of the most disruption here in the near term, followed maybe a little bit by the automotive side. But again, to allay anyone's fears, Christmas should be okay.
Okay, got it. You had mentioned C.H. Robinson and Expeditors earlier on. To what extent will any of this disruption show up in their earnings when they do report? Would it have to be a disruption of more than a week for it to make its way into the numbers?
I think we have to go a little bit beyond a week to try to get into some of the numbers. And again, I think what this is going to do is it's going to push some of the rates up as people look to have emergency moves to protect their supply chains. And if you're a middleman, you're making a margin on the move. And so if the price is going up, you tend to have some more profits right there.
So give us a sense here, Jason. I mean, as we talk about the potential for this to go beyond just a couple of days, and we've got a great story in the Bloomberg terminal today, speaking with the head of the ILA, and they seem pretty committed to make sure that they get their pound of flesh out of this. What's the recovery time? Should they actually strike a deal? How quickly can you get this stuff back up and running?
Sure. So the general rule of thumb when you're dealing with the ports is for every week a port is down, the supply chain is impacted by about a month. So that's what you should use. If we have a 1 week strike, we should be down about a month. We have a 2 week strike, we're going to be impacted to probably 2025.
All right, Jason, going to have to leave it there. Jason Seidl there, analyst and managing director over at TD Cowen. A closer look at that dock workers strike has now affected at least 36 ports along the U.S. East and Gulf Coast. A strike, at least according to the head of the dock workers union, could extend for quite some time. Of course, that's just one big issue that investors have to digest here. The other one is, of course, the developments that we've been talking about all day long. And those are the missile strikes that we saw earlier today. Missiles going from Iran into Israel. Of course, Israel also setting off its own missiles to intercept some of those projectiles. Of course, this is an ongoing situation and still developing. A lot of questions left unanswered. Stephen Cook is joining us right now. He is CFR, the Council of Foreign Relations Senior Fellow for Middle East and Africa Studies, and he joins us right now. And Stephen, when we talk about the potential to even resolve a conflict like this, a conflict that has been going on for years, and really, if we want to be honest about it, decades, I am curious as to where, if at all, the negotiations and the diplomacy would come in.
Well, right now, there is no opportunity for negotiations and diplomacy. The ceasefire that the United States has been working towards in the Gaza Strip for many months has failed to materialize, mostly because the parties aren't interested in a ceasefire. This new development, the war in Lebanon and now today's Iranian missile strikes on Israel, are going to require from the Israelis, they are saying that they will respond with a severe retaliation. So this is a conflict that at the moment is not ripe for negotiation. The administration had been talking about a 21-day ceasefire in Lebanon, but events have really overtaken diplomacy here. And the Israelis want to press their advantage in Lebanon against Hezbollah, and now feel the need to respond to the latest Iranian attack.
Well, what I'm curious about is how much sway the U.S. has. And I'm glad you brought up Gaza. I mean, we are just a few days away from the anniversary of October 7th. And the U.S. has held up its hand a lot to Netanyahu and said, slow down, don't do this, take your time. And we've seen that ignored time and time again as they've pushed through Gaza and now, of course, have turned their attentions to the border communities along the West Bank there. How much sway does the U.S. have right now to, I guess, get Israel to do what the U.S. thinks it should do?
Well, the Israelis have stopped listening to American advice on a variety of issues some time ago. And I think the disconnect was really started last October when President Biden visited Israel. He believed that he was gaining some ability to influence how Israel's military operations were unfolding, while the Israelis saw his visit and his quite compassionate words for Israelis at that time as essentially a green light to pursue Hamas and other members of Iran's axis of resistance as they see fit. And we've seen, as this conflict has unfolded over the course of the last year, moments where those two messages are crossed, where President Biden would like to have influence and believed he had influence over the Israelis, and the Israelis saying, but you essentially support us, so we're going to pursue our military operations as we see fit. Once again, it's extremely difficult for the United States to impose anything on parties that don't want to end the fighting. And Palestinians in Gaza, Hamas, I should say, in the Gaza Strip, and Israel are engaged in an existential fight. Israel cannot abide by Hezbollah being able to intimidate the 60 to 70,000 residents of Israel's northern communities. And therefore, the Israelis feel like it is important for them to push Hezbollah back from that border. And of course, now that the Iranians have attacked all of Israel, population centers, military bases, whether they've been successful or not in killing anyone, is rather beside the point. And the Israelis have to, from their perspective, respond with a significant amount of force.
Well, to follow on Romaine's question, if the U.S. doesn't have the sway that it once did, who or what could step into that void and potentially speak to Netanyahu and convince Netanyahu to follow their lead? Or is Netanyahu just determined to pursue his own course of action?
Well, I think first, let's be clear. The United States never had as much influence as we like to believe that it has. These are sovereign countries with their own politics. And I think the role that the United States has played over the years demonstrates the limited American influence with Israel and, quite honestly, other actors. And this isn't just a Netanyahu problem. I mean, it's clear that Netanyahu has a trust deficit with various American presidents and, quite frankly, with his own population. I was just in Israel, and he has his core of support, but the vast majority of other Israelis don't like the prime minister. But in fact, Israelis are there is a consensus in Israel about changing the security equation for them, particularly after October 7th. They were vulnerable to attack. They believe that they cannot live with terrorist organizations on their borders threatening them. And therefore, they do support much of what the Israeli government has done. Of course, there are many who would like the government to have prioritized the return of hostages. But at the same time, when it comes to Hezbollah and Iran, I think that there's quite a large consensus in Israel that it was time and it is appropriate to change the security equation and try to resolve some of these security problems that Israel has.
Stephen, as you astutely pointed out, if the parties themselves are not interested in any kind of ceasefire or compromising in any way, what does the best case scenario look like from here on out?
Yeah, this is the really dark piece of this. I think when it comes to Gaza, the Israelis are turning a page and believe that major military operations there are over and are likely to ring Gaza with forces and retain for themselves the right to intervene and conduct anti-terror operations throughout the Gaza Strip. They are setting up so that they remain in parts of Gaza, notably something called the Netzarim Corridor, which bisects the Gaza Strip on an east-west axis and cuts it essentially into north and south. And from there, they will conduct anti-terror operations. When it comes to Lebanon, the Israelis are determined to push Hezbollah back so it cannot threaten Israel's northern communities. How they choose to do this remains to be seen. The Air Force has done a significant amount of damage to Hezbollah, but as we've seen, the Israelis have committed some force to Lebanon. People are talking about it being limited and targeted, but we don't really know for sure what the Israelis intend, and they're certainly not telling anybody. And of course, with Iran, this escalation and counter-escalation is extremely, extremely dangerous. We don't know where it will end.
Stephen, we only have about a minute left, but I am curious just about the direction of Iran right now. I mean, they have a new president. I think it was last week, Bloomberg wrote a whole story about how he was talking about how he was looking forward to going back to the table for those nuclear talks. And I'm just curious as to whether there is any sort of foreign policy discussion to be had, meaning with the U.S., that would actually involve Iran in any sort of a peer-to-peer type of conversation.
Well, I think the messages that the new Iranian president is sending are positive ones. I think that people would like to hear that from the supreme leader. The Iranian president really doesn't have a say in Iranian foreign policy. So if the supreme leader, Ayatollah Ali Khamenei, said those things, that would be something that would be worth putting more stock in.
Right.
As of now, with the new Iranian president, it seems as if it is an effort to divide the West, to divide Europeans from the United States, divide the West from Israel. I wouldn't put much stock in it until the Ayatollah says the same thing.
All right, good stuff. Stephen Cook, Council of Foreign Relations, Senior Fellow for Middle East and Africa Studies. Thank you so much. Coming up, we count you down to the market close with Garrett Melson of Natixis Investment Managers. This is The Close on Bloomberg.
5713 on the S&P 500 with 10 minutes until the closing bells. Romain Bostic here alongside Scarlett Fu, and we opened the day in the red. But things, of course, got a lot worse once we learned about those missiles coming from Iran into Israel. That sent the market down pretty significantly. But we are off the lows of the day, though still in the red. Yeah, at one point, the S&P 500 was down 1.4%, the biggest decline in about 3 weeks, with tech companies leading the way down. But it is a classic risk-off day right now, with stocks lower, bonds higher,
Oil prices, of course, elevated because of the conflict in the Middle East. And we should mention defense companies. The ETF, oh, actually, that's the wrong ticker there, but there is an ETF that tracks defense companies, SHLD, and it is up for a ninth day in 10, thanks to gains in Northrop Grumman, as well as, Boeing and those legs. Yeah, also, of course, and there you see those names there on your screen here. Of course, the commodity space also seeing significant gains here on the day, and we had the VIX up there. But we should point out all of the major volatility measures moving to the upside and staying there as you get closer to those closing bells. Garrett Melson joining us right now. He's a portfolio strategist over at Natixis Investment Manager Solutions, joining us today from Boston. And Garrett, I got to start off just talking to you about the start of this month. I mean, we're coming off the last day in September, record high. What else is new for this market? A bit of a pullback today. And I think the expectations right now are that once things settle down in Israel and Iran, once things settle down when it comes to some of the other potential geopolitical issues, that investors will then just flock right back to some of those growth stocks. Do you see that happening?
Yeah, well, thanks for having me, Romaine. Absolutely. I think a lot of investors look at this scenario and this event today and look back to the events that we saw unfold back in April. And it feels very much the same, where we had a little bit of advance note warning. We had a strike. You have that knee-jerk reaction by markets, pricing in a little bit of conflict, a little bit of a risk off, flight to the traditional safe havens, and obviously a bid to oil. And then as things kind of simmer down a little bit, you start to see some of that risk appetite come back into the marketplace here. So, I think the geopolitical risk has certainly been part of that wall of worry we've been hearing about for, what's going on multiple years at this point. Yeah. It certainly doesn't feel like it's going away, but it does feel like once things kind of settle down a little bit, you kind of go back to where the trend was. And that certainly feels like it's biased for prices to continue moving higher. But I am curious about the potential fragility of the market. And I remember it was just, it was a few weeks ago, Gargi Chaudhry over at BlackRock was kind of making this point on this network, this idea that with valuations so high, any sort of exogenous shock, whether it was geopolitical or otherwise, was going to have huge ramifications for a market that a lot of people have looked at and just said they're not quite sure if these valuations are justified. Yeah, we tend to hear that, and obviously it's anytime you start to see valuations pushing up towards what is perceived as an extreme, but we tend to have a little bit of a different view on valuations. It's more of an opinion than anything, and it's really only useful as kind of looking back ex ante or ex post, when you can recognize that we were at kind of valuation extremes and a little bit vulnerable and fragile, you could say. I would actually argue that what we've been seeing over the last year plus has been a market that continues to see valuations push higher, but the earnings continue to justify that. And so you actually see that price starts to lead those estimates moving higher, and then ultimately those results continue to come in and surprise to the upside. So I wouldn't say that this is a fragile market just because valuations are at elevated levels at this point. I'd say that the fact that a lot of these companies continue to deliver on results, those estimates for earnings continue to drift higher here, I think that's a market that honestly justifies that premium. But there are a lot of shocks hitting the market at the same time, whether it's the conflict in the Middle East or the port strike that just began. To what extent do you think the port strike and the disruption that it could cause, even one day of closure, could lead to a week's worth of disruption? How much of that is priced in right now? Yeah, well, I think when it comes to the strikes, it's not the first example we've had of this over the last couple of years. We certainly had examples of it back last fall. And the general takeaway is that a lot of these are fairly short-lived. I think one thing that gives us a little bit of a buffer here and a little bit less concern about the port strikes, we've had a little bit of encouraging news flow, and that helps. But more importantly, you did see some front-loading and essentially front-running of imports over the summer months here. So it certainly feels like some of these companies were starting to plan for this disruption, and that helps to mitigate some of the downside risks. Obviously, there are some lasting repercussions here, and as you start to have a little bit of a pile up in terms of the ports, that does have effects, but eventually those fade away. And so in the effects of how this really impacts the marketplace, I think it's fairly short-lived and something that ultimately kind of unwinds as you look out into the later months here. So not something that we'd really be positioning for aggressively or that has really lasting effects for the broader market or economic outlook. Okay, another risk, of course, is the upcoming election. I know that in terms of positioning, you are overweight equities, favoring large over small caps and U.S. stocks over rest of the world. But at the same time, you talk about how you'd be buyers into any kind of election-related weakness
weakness in the coming weeks. What kind of election-related weakness could we expect?
Yeah, well, if you look back over the last couple months here, you can see, certainly market performance being dictated at some times by what the polling results are. You've had a little bit of a breakdown more recently. I think what's been more important for investors has certainly been what's happening on the growth and more importantly, the unemployment front. And as a result, what the Fed policy path is likely to be going into the future here. That said, it's not surprising that you might see some volatility in the October months leading into the election. That certainly has been the historical track record here. So hard to say what the actual trigger might be. It could certainly be a shift in those polls or some unforeseen risk. I mean, the conversation today has basically been one brick after another from that wall of worry. But the bottom line, I think, that investors need to keep in mind is that the earnings outlook and trajectory continues to look good. Yes, there are some risks that have grown to the downside, specifically with respect to unemployment. But I think you're in an environment where good news is good news and bad news is bad news. And by that, I mean, good news from a data front means that ultimately things are holding up and the outlook is still pretty resilient from a growth perspective. And if you start to see some cracks on the margin, well, ultimately, I think that's going to just elicit a more aggressive and meaningful response from the Fed. And so the bias, in our opinion, continues to be biased higher for prices into year end. And from a position of fairly light risk, certainly not euphoric sentiment, and positioning that seems to be still skewed a little bit towards the defensive side of the marketplace, I think that really speaks to a market that's going to continue to grind higher, led by tech and cyclicals into year end.
All right, Garrett, going to have to leave it there. Garrett Melson, portfolio strategist over at Natixis, helping us count down to those closing bells. A little less than 3 minutes to go here. Stocks now retreating back towards the lows of the day. Not quite there yet, but it's kind of interesting to see, Scarlett, what's getting bid and more importantly, what's getting sold here. Certainly a defensive posture. We talk about obviously a bid into defense contractors, energy names here, and obviously anything that's had sort of a higher valuation, some of those tech names moving lower.
Yeah, tech stocks off by 2.6% on the day, while energy stocks certainly getting a knee-jerk reaction lift with the jump in oil prices.
Two of the interesting movers on the day, Nike higher on the day, as is Calmain. Both companies reporting earnings after the bell. Full coverage coming up right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu, taking you to the closing bell, a global simulcast. It starts right now. Carol Massar joining us in the radio booth alongside Tim Stenovic, Alex Steele, still on assignment for today, as we welcome our audiences across all of our Bloomberg platforms, including that partnership with YouTube. Right across the screen here on the first trading day of October, Carol, a lot of that has to do with two big developments. Of course, a port strike here in the U.S. and military conflict in the Middle East.
Yeah, absolutely. Trying to assess all of this domestically, geopolitically. Having said that, certainly the Middle East, we did see market reaction, whether it was in the energy markets or that safe haven trade. We've backed off a little bit off of it, but we did see also the VIX spike a bit, hitting 20 at one point. And you do wonder, Tim, certainly investors thinking more volatility to come in this market.
Yeah, I do think it's notable that that stocks aren't actually lower right now. I mean, we were down as much as 1.4% on the S&P 500 earlier in the session. Maybe investors, I know it sounds kind of crass to say, but breathing a sigh of relief that the escalation coming from Iran wasn't more, Scarlett.
Well, it's still early days, of course. This was just the first day where there was an attack. But I should mention as well that given that investors seem to be in a bit of a wait-and-see mode, it's interesting that volume has not been off the daily average. It's only about 4% below the 20-day average. I was expecting to see a bigger drop-off, given that people wanted to wait until there was more clarity from what's going on geopolitically as well as from earnings.
Yeah, absolutely here. And we should just point out here, we did have some big moves in the commodity space. Of course, oil prices did spike, as did precious metals, including gold and silver, as people went into those safe havens. We also saw a lot of activity in grain prices, which could be affected by any sort of prolonged conflict there between Iran and Israel. Meanwhile, we get the equity market close here in the United States with red across the screen, though the good news is we are far from the lows of the day. A Dow Jones Industrial Average down 173 points or 0.4%. An S&P 500 that's going to close just above 5,700, down 54 points or 0.9%. A NASDAQ Composite down about 1.5%. And the Russell 2000 also moving lower here on the day by about the same percentage, about 33 points lower or 1.5%.
All right, so on the this first trading day in the fourth quarter, let's take a little bit of a deeper dive into the S&P 500, those large caps, guys. As Romain has been talking about, I mean, most names, you did see that risk-off trade. So 340 names in the S&P 500 to the downside, Scarlett, 162 to the upside, one unchanged.
Yeah, and to go along with all that red you see there among the major indexes, you look at the breakdown of the sectors within the S&P 500, and the worst performers so far in the fourth quarter, of course it is day one of the fourth quarter, are tech stocks, losing 2.7%. REITs off by 2/3 of 1%. Financials losing about 0.5 of 1%. In terms of gainers, energy stocks, clearly the outperformers here, up 2.25%. 21 out of 22 names gaining. Utilities, another safe haven kind of trade, up 0.8 of 1%. And communication services higher by 0.4 of 1%.
All right, a lot of red in that map. All right, let's get to some of the individual gainers. I'm going to start with, you guys have been talking about some of the sectors that were certainly impacted as a result of what was going on in the Middle East. Well, the military names, the defense contractors, among them Northrop Grumman and Lockheed Martin, among the top gainers in the S&P 500. So let's just pull it up. Northrop Grumman. Sorry, up about 3%, but it was as high as 5% in today's session, but still with a gain, as we said, of 3%. Moving on over to Lockheed Martin, that one also finishing off its highs of the day, but a gain of about 3.6%. And we did see some higher volume. Scarlett was talking a little bit more about volume, but we did see some higher volume on some of these names. All right, two, also APA Corporation. This one up almost 5% in today's trade. Total Energies and APA approved a $10.5 billion project to develop the first oil discoveries off of Suriname with a view to pumping crude as soon as 2028. So we saw investors moving into that one. Of course, watching the energy trade in general out of the Middle East news today. And then Paychex. This was a top gainer in both the S&P 500 NASDAQ 100, this one up almost 5%, up the most in about 1.5 years. The payroll and HR services company reported first quarter results that beat expectations and gave an outlook. And speaking of earnings, we've got some crossing the Bloomberg.
Well, actually, a change in management. This over at LPL Financial, only about a $17 billion market cap. This is the advisory and brokerage firm saying that they have terminated their CEO, Dan Arnold, and I'm just going to quote this, for violating LPL's commitment to a respectful workplace. He has also resigned from the board, and right now they have appointed Rich Steinmeier as interim CEO. We should point out that those shares, Tim, halted here in after-hours trading.
All right, thanks for that update, Romain. I do want to get to the decliners that I had my eye on today. I do want to start with shares of Apple falling close to 3% today. Romain, did you get that new iPhone yet?
Well, no, I have not, but okay. I did check it as I check it every 10 minutes here. Okay. It has actually gotten through customs, so it is actually here on terra firma in the good old US.
Okay, tune in tomorrow. Tune in tomorrow.
Now UPS, the ball's in your court. Get this thing to me.
For the next update of when and where is Romain's.
Are you going to do an unboxing video?
Can you imagine how boring? No offense.
Oh my God, that would be so
The iPhone
incredible.
16. Wow. Okay.
Please do it.
Hey, actually, this is a good point. It kind of speaks to why Apple shares were lower today. Analysts and investors are continuing to track just how high demand is for the company's latest iPhone. Many are hoping will re-accelerate growth. Barclays wrote, though, that Apple may just have cut roughly 3 million units at a key semi-component in iPhones for the December quarter, which it confirmed would be the earliest build cut in recent history, if they were to confirm that. Excuse me. Separately, our own Mark Gurman reporting that Apple is preparing to announce a new low-end phone. It's the iPhone SE. Coming next year alongside upgraded iPads. It's codenamed V59. It'll become its new entry-level model, according to people familiar.
Why does it need to be codenamed? You just told me what it is.
Everything needs a code. Names are cool. I think that's what it is. You got to have a code name.
What's your code name?
It's a secret.
Clark Kent.
It's a secret.
Totally, Clark Kent.
All right, let's move on to CVS. Shares falling a little more than 3%.
See how he dodged that, Carol?
I've gotten that.
So you know it was really Clark Kent.
Halloween.
He's had that before. You can tell.
Our Bloomberg News team is reporting that shares of CVS, reporting that the company is conducting a strategic review of options, including a possible breakup, according to a person familiar with the matter. CVS faces headwinds, not just from its drugstore chain, but also its Aetna Health insurance arm. The company also said separately today that it plans to cut roughly 2,900 jobs to reduce costs. Shares falling down 2.13%. Also keep an eye on HPQ, down 3% today. That's HP Inc. A warning from Citi about a cautious view on PCs due to the impact of a weakened macro environment. Scarlett.
All right, let's get to some breaking news. We've got earnings out of Cal-Maine, the poultry producer, so they sell eggs, reporting earnings per share for the fiscal first quarter of $3.06. That misses the average analyst estimate by 30 cents. Net sales for the period was $785.9 million. That is higher than the consensus estimate, although we don't have a lot of estimates to really cull a median number from. But nevertheless, the consensus estimate is just over $700 million. So revenue outperforms expectations and EPS misses. The stock up right now almost 6% in after-hours trade.
Yeah, absolutely. Interesting, too, in the statement, they also talk about their exposure to Hurricane Helene. Of course, they have a lot of operations down in that region here, so they're not able to provide too much of a guidance here going forward, primarily based on that. Meanwhile, let's take a quick look at where U.S. Treasury yields ended the day, slightly lower on the day, part of that flight to safety. Of course, the bid that came in was largely centered around the heart, the benchmark, the 10-year yield there, down about 5 basis points, 3 to 4 basis points moves along the other parts of the curve.
All right. Listen, what a day. And I'm thinking, this is just a reminder. And I kept kind of quoting as we were doing our coverage here, and I'm assuming you guys did too, of what was going on in the Middle East, is go back to December of 2023. And when we talked with investors and market strategists about some of the things that were on their radar, one of the things that was a key concern was geopolitical risk. Yeah. And so what we are is in this environment, right, where we have to assess where does this go next? How much longer does it go on? We were just talking with our Nick Wadhams, who covers national security here in the United States, saying that, these are both issues, whether it's Ukraine, Russia, and also the Middle East, that will carry over into the next presidency. So this is something that's going to linger for some time.
Yeah, I think in terms of timing, I mean, it does come, just over a month away from the presidential election here in the U.S. And what ends up happening would certainly depend, at least when it comes to U.S. involvement in these regions around the world, would be entirely dependent on who ends up winning the White House, Scarlett, in just over a month.
Let's not forget, too, that we're days away from the October 7th anniversary as well. And there's going to be lots of protests here in the U.S. and around the world. And for a lot of people, a very emotionally trying time, too, as we look to see what else happens.
We get to this idea, though, too. I mean, you mentioned foreign policy, and we were speaking with Stephen Cook over at the Council of Foreign Relations, kind of talking about the lack of influence, at least in his view, that the U.S. has over Netanyahu and that administration. The idea that, Israel has made it clear what its plans are. It's made it clear that it's going to defend its borders and to keep its folks safe here. And I think that's where a lot of the concern is with investors right now, is that in order for them to carry through on that, this might have to be ratcheted up, and no one really knows where this is going to go right now.
Right. What does that escalation mean maybe for the U.S. in terms of military presence or boots on the ground? So certainly something that we'll continue to track. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place tomorrow.
All right, our coverage continues here on Bloomberg Television, a focus on the markets and a focus on earnings. We are awaiting that quarterly report out of Nike on a big day here with the changing of the guard. Stick with us. This is The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. A look at how markets performed here on the day. A lower open, but that was largely because of concerns here about a port strike in the U.S., as well as some relatively soft economic data. But the selling intensified once we started to see that barrage of rockets come from Iran into Israel. And, of course, the Israel response, sending those interceptors back into the sky. We did close off the lows of the day, but still red across the board, with the S&P 500 down about 0.9%. The NASDAQ and the Russell each down by about 1.5%, a 4% bump up today for crude oil.
All right, let's take a look at some of the day's big movers here. And we're going to begin with a couple of ETFs. XLE covers and tracks the biggest energy companies, and 21 out of 22 of those names finished higher as oil prices climbed. We're also looking at ITA. This is the ETF that tracks defense companies and aerospace companies, gaining more than 1%. These were some of the gainers in trading today because of what's been going on in the Middle East. And a quick idiosyncratic story here, Apollo Management gaining almost 6%. The alternative investment firm says it expects to generate $10 billion of annual earnings across its asset management and retirement businesses by 2029, and that is on the heels of strong demand for private credit and annuities.
All right, right now we are keeping an eye on Nike. That company expected to report earnings any minute now, and of course a company that's dealing with a lot, a new CEO who hasn't even taken over yet, and of course that's on the back of quarters of soft sales growth. Bloomberg's Kim Bhasin joining us right now, who wrote a very intriguing story just a little while ago about John Donahoe, the outgoing CEO of Nike. You wrote that before we knew he was outgoing. Now Elliott Hill taking over. I'm not sure he's going to be on the call today, but he's inheriting a company that's dealing with a lot, including decline in sales.
He is, and they're going through a transitional period right now. So John Donahoe is still currently the CEO of Nike. I'm not sure if he's going to be on the call later today or not. But Elliott Hill starts in about 2 weeks. Everyone's really looking toward the first day he starts and Investor Day, which is scheduled for November. They may or may not push that back so that Elliott has more time to really develop a turnaround strategy for Nike.
So for this quarter, or for the quarter that ended, we're looking for a 10% drop in revenue. Did John Donahoe take over Nike at a time when Nike was kind of losing some of its momentum, or was it under him that the company lost momentum?
Donahoe was brought on back in 2020 by the board of directors because they wanted to really expand and modernize their digital business, right? So direct to consumer was all the rage. That's what they wanted to do. They cut a bunch of their, like more than half of their retail partners in favor of their own stores, own website, and own apps. So that increases margins and brings everything in-house, right? They did that, and sales did go way up for a while. It was during this time where they really leaned on what they call lifestyle sneakers. These are not for the courts or the fields or anything truly athletic.
It's for me walking.
Yes, on the sidewalk, streetwear, you know?
Yeah.
Nike Dunks, Air Force Ones, Jordan 1s, those were the three hot shoes for several years. But then last year we saw sales really cool on all three of those styles.
Well, was that because they just kind of saturated the market? I mean, at some point, it's not hot if everyone's wearing them, right? I mean, I understand there's sort of a sheep effect. People flock to what other people are wearing, but if everybody's got the same thing, suddenly it's not quite as cool.
The example we really got into in that story was the Panda Dunk. It's that black and white dunk shoe that everyone has. Panda, get it? And they really, it started off being super hype. It was a super hype shoe that everybody wanted. It would sell out at every drop, but then they just saturated everything. All
right, Kim, we are getting Nike earnings crossing the wire right now, and the numbers are pretty much where folks had thought they would be. Revenue coming in at about $11.6 billion, down 10%, so pretty much in line with what the street was looking for. And it's on a regional basis, it's basically a negative sign across the board. 11% drop in North America, 13% drop over in Europe, 4% drop in China, a 7% drop in Asia Pacific. As far as the bottom line, well, not a whole lot better. EPS coming in at 70 cents a share. That was versus 94 cents a share the previous quarter, a year ago quarter. Not quite sure what the estimate is that the street was looking for here. But overall, Scarlett, we are talking about a company that's still trying to work its way out. 52 cents, that was the estimate. So now a redhead crossing the wire here, that an investor day that had been scheduled has now been postponed, of course, as we get a changing of the guard and CEO in just about 2 weeks' time.
And while you were giving these numbers, I was looking at the share price and how it's moved, and it did jump as much as 4% on the headlines, but then it rapidly paired those advances, and now we're, bouncing around here. One thing that's worth noting is that the gross margin did increase 1.2% to 45.4%, and that was also higher than what was anticipated. Analysts were looking for a 44% gross margin. Also notable, Kim, as we talk about John Donahoe, the outgoing CEO, within the press release, there is no quote from him at all. Instead, you have a quote from the CFO and the Executive Vice President, Matthew Friend, talking about how the first quarter largely meets our expectations. A comeback at this scale takes time, but we see early wins from momentum in key sports to accelerating our pace of newness and innovation. Tell us a little bit about Elliott Hill, the incoming CEO. What I do know is that he was a former intern at the company.
He was. Elliott Hill started there more than 3 decades ago. He rose all the way up to the rank of president. He was president of consumer and eventually retired right after under Donahoe started in 2020. He was really excited to retire. I hear from people around him. He wanted to, go to his house in Italy and bike in the countryside. And he spent the last 4 years being retired. But now he is all the way back, and this is the situation that he inherits at Nike right now. This earnings report is the baseline for him.
What's sort of the rebound story going to be? Is it going to be about fashion, or is it going to be more about, I guess, some of the more athletic and technical shoes? There's been so much talk about Hoka and On Running, sort of these things that appeal to, I guess, more athletes, if you will, that have sort of taken some of Nike's thunder. What's the future?
There's a few things that Elliott Hill has to fix here. One is these retail relationships with all the partners that they pushed aside before and have been re-engaging with recently. So you got to fix those relationships. Then at home, at their home headquarters out in Beaverton, Oregon, relationships with employees as well. Morale had been at an all-time low earlier this year under Donahoe's leadership, and this former intern is hoping to refresh that.
Just a dumb question: is Phil Knight still involved?
Phil Knight is still involved.
Okay,
yes.
Yeah.
He's the chairman emeritus, so he still sits in on the.
So he does. So he's got a say, right?
He does have a say.
He can weigh in at any time.
He also controls the who's on the board of directors.
Important role there.
Well, that's a say.
It is a say.
You had mentioned, Romaine, about the Greater China revenue coming in slightly higher than anticipated, 1.67 billion. Analysts were looking for 1.62 billion. But this is a source of concern overall for Nike, isn't it? The China business, and this is something that Nike can't just fix either, because it's a demand issue from China overall.
Nike's gone through quite a roller coaster in China over the past several years, starting with the boycotts around not using Xinjiang cotton several years ago. And since then, the Chinese consumers have really been flocking to the local brands. There's Li Ning, there's Anta, and it sort of gave them an opening. And now they're willing to get these brands. Some of these brands even sponsor NBA all-star level athletes and things like that.
Yeah.
They're in the sneaker ecosystem now, and Nike just has to deal with that.
Just curious, are you wearing Nikes right now?
I am wearing Nikes right now.
There you go.
Because of Nike earnings, or
Vomeros? No, these look good, right?
No, he's just a fashionista. He just
you always have to
he's
see
like
what
one of the most
Kim is
stylish
wearing.
dressers.
Yes,
when he walks around the office.
We'll say we accept all compliments. So.
Kim Bhasin, thank you so much. Kim Bhasin covers Nike for us here at Bloomberg News. And coming up, we're going to stick with our coverage of Nike and dive a little deeper into those results with Anna Andreeva of Piper Sandler next. The stock currently lower in after-hours trading by more than 1%. This is The Close on Bloomberg. Shares of Nike bouncing around in after-hours trading, currently a bit lower right now by 1% after reporting revenue that missed analyst estimates, a 10% drop from a year earlier. Profit also declined versus last year, although it was higher than what analysts anticipated. And another big headline here is that Nike has postponed its previously announced Investor Day. Joining us now is Anna Andreeva, who specializes in equity research at Piper Sandler and covers Nike with a neutral rating on the stock. Anna, how significant is it here that Nike has postponed its Investor Day? I know that they are in the middle of a transition period where they're going to be handing the reins from John Donahoe over to Elliott Hill, but nevertheless, are investors disappointed that they're not getting more of a structure to what Nike has in plan?
Thank you for having me, and great to be here. We actually think it's pretty prudent on their end to push out the analyst day. I think you want to give Elliott some time to really look under the cover and understand what's going on with the business. And there's a lot of heavy lifting that Nike is undergoing right now, and a strategic plan that really would be more his own would take time. So we think that's completely logical on their part and is prudent, as I mentioned.
What gets sales up, Anna? Are we talking about better marketing, better shoes? What?
Yeah, so, in the past, Nike had to worry about Adidas being a big competitor. For the last couple of years, it's really been a number of brands that have been bringing innovation and newness to the consumer and gaining share. And whether that's On Running, whether it's Hoka, New Balance has had a lot of momentum as of late, as well as Brooks and even a smaller brand like Saucony. So I think it's going to be tough from a competitive standpoint. Also separately, Nike has talked about rationalizing the 3 big franchises that they have. Those 3 are Air Force One, Dunks, and Jordans. And frankly, those were very popular several years ago. It does seem like the company oversupplied those franchises to the market. And of course, after a while, those just become less popular. And to our math, those are really pretty significant, about a third of sales of overall company. So rationalizing those while bringing performance innovation in an industry where lead times are still very long. Yeah. It takes about 9 to 12 months to produce a new shoe. Certainly, this is a turnaround that's going to take some time.
Okay, so they have a new CEO coming in, Elliott Hill. I know that he's a former intern. He had already retired, but he's being brought back out of retirement. John Donahoe, his predecessor, specialized in the tech side. He was really brought on to focus on direct-to-consumer. What is Elliott Hill's biggest challenge going to be? Is he a product person? Is he a brand person? What does he bring to the table?
Yeah, so this is a great question. So he is a Nike veteran, and for a company that has had some issues culturally as of late, I think bringing a veteran back who was at Nike for 32 years is very important. Elliott is not necessarily a product guy, is our understanding, but he is a brand guy, and he does have great relationships with the partners out there. So under Donahoe, the move for the last several years has been Nike pushing more into their own DTC, and we do think some of that is going to go back into the wholesale channel under new leadership. But of course, all of this remains to be seen.
Just real quick, only about 30 seconds. Do you see any potential for any M&A activity on the part of Nike?
No, I think there's a lot that they need to do in terms of turning around the brand. Nike is a phenomenal brand that has a lot of brand equity that lately, has been tarnished. But I do believe it's possible to bring that back. So I think focus will be more important rather than, going out and playing in the M&A field.
All right, Anna, going to have to leave it there. Anna Andreeva over at Piper Sandler. A breakdown here of the earnings that we just got out of Nike. Those shares moving lower here in after hours trading by roughly about 1%. When we come back, we're going to stay on sports and go to one of the biggest sporting events of the week. The founder of the Professional Fighters League stopping by the PIG program to talk about the Battle of the Giants event in Saudi Arabia. That's coming up next after the break. This is The Close on Bloomberg. All right, welcome back to the big program. A discussion now about mixed martial arts, one of the hottest sporting events in the world, and it's drawing in hundreds of thousands of fans worldwide and millions in investor funding. MMA leagues like the UFC are finding innovative ways to grow the business. Just last month, we had a chance to sit down with the co-owner of the UFC, Dana White. He's talking about some of the competition out there.
There are always going to be people trying to compete. There's no barrier to entry to this. Anybody can get involved and anybody can try to do it. I don't ever think about that, about what other people are doing or what their plans are for MMA in the future. I focus on what I do. I know what my game plan is for the next 5 years, and that's all I care about.
All right, and well, maybe everyone can coexist together because one of UFC's biggest competitors is the Professional Fighters League, the PFL, and it will host Battle of the Giants, a big fight in Saudi Arabia later this month with the former UFC fighter Francis Ngannou up there against Renan Ferreira. Joining us right now is Donn Davis. He's chairman and founder of the PFL. Great to have you here, Donn.
Great. It's always good to talk fighting.
All right, let's talk about it. And I wanted to play that clip for a reason here. I mean, look, you got Francis Ngannou. Obviously, he was a star in the UFC, a mega attraction. You've got him here in the Battle of Giants here. And I am curious about the competition, if you see it that way with the UFC, or do you see yourself as something completely different?
Completely different. On this, Dana White and I agree. If you look at the basic numbers, there's 650 million MMA fans. That's the third biggest fan base, trailing only soccer and basketball. UFC gives them 40 fights. We give them 25 fights. There's only 65 fights for 650 million fans. Yet basketball, 4,000 games. Soccer, 4,000 matches. So MMA, very underserved, very undermonetized. Plenty of room for two big global companies. And what PFL does, distinct and different. We're the sports season format. So think of it as March Madness meets MMA. The fighters are in control. If the fighters win, they advance. If they lose, they're done. Very different from UFC.
Well, that's what I'm curious about, too, because one of the criticisms of UFC was the lack of control fighters have. A lot of fighters have basically said, look, if you're not basically kowtowing to Dana, you're out. And there was for a while, there was no other option here. Why is your league, forgive the phrase, more fighter friendly?
In just 6 years, we've gone from 0 fighters to the same quality roster of UFC. Why? Opportunity. An opportunity that the fighters wanted. So in our league, the fighter decides their own destiny. How? If you win, you advance to the next fight. If you win 4 times, you're the champion that year. In their league, when's your next fight? What are you fighting for? How do you get ahead? It's all a mystery black box. It's not in your control. So we're much like the NBA. Adam Silver doesn't decide anything. It's all decided on the court. I don't decide anything in the PFL. It's all fighter control in the cage. So 30% of our roster is top 25 ranked by independent metrics. The same 30% is UFC. Unheard of. 2 leagues, equal talent in just 5 years.
You talked about court and then you said cage. I'm just learning about mixed martial arts, and I know that your fighters use a smart cage. The UFC uses an octagon. What is the difference between the two? And I know you're going to say the smart cage is better, but how does the smart cage differ from an octagon in terms of what it brings for the fighter?
Correct. Both UFC and PFL operate under the same unified national rules. So it's the same rules of fighting, but PFL is a much more modern product. A lot of people don't know how great these fights are, so we make it easy. Think of the yellow line in football for first down or the strike speed of baseball. That's what we bring to MMA. So what do? Real-time scoring with AI on the screen. Tells you who's winning after each round. Kick speed, punch impact, heart rate. You see it on the screen. So if you're a sport fan and you're new to MMA, you now have gamification and data on the screen that tells you what's going on so you can quickly come to understand and appreciate the sport.
And in terms of the two big companies, there's obviously UFC and then there's you. It's almost like a duopoly of MMA. But there are lots of other smaller leagues. And I believe that you bought Bellator and its roster from Paramount in late 2023. Is that the first of many more acquisitions to come?
No, I think it'll be it. What Bellator really brought, they were the only organization for 10 years out there before PFL started. So they had a fantastic fighter roster. So really now it is a duopoly. If you look at fighters, equal. If you look at distribution now, UFC and PFL, 170 countries. And if you look at audience, we're about half their viewership. So there is no number 3, number 4, number 5 in the market. It's UFC and PFL on a global premium basis.
I know the pay-per-view and the television viewing is a big part of the business here. But you're holding this in Saudi Arabia, not your first event in Saudi Arabia itself. But I am curious as to why. Why Saudi Arabia?
Our partners are PIF and Surge. They invested about $100 million 18 months ago to buy 20% of the company. Been fantastic partners. And one of that partnership is funding us to build the roster that we did. And the second is to be able to host these mega super fights that we call them. This fight with Francis Ngannou versus Renan Ferreira is the biggest fight in MMA this year, the most expensive fight in MMA this year. We couldn't do that without our PIF partners and the Minister of Sport of Saudi Arabia. They're funding half that fight for us in Saudi Arabia. So that allows us to do bigger and better events than ever before.
With regard to viewership, what are you expecting, particularly for this fight on October 19th?
October 19th. Well, we only hold 2 pay-per-view events a year. We call them super fights. 28 of our fights are broadly available on TV. Here, we want fans who have not watched the PFL before to watch ESPN or DAZN pay-per-view and say, that's the best MMA fight I saw in 2024. And if we do that, we win. Because now fans say, there are 2 companies at the highest level, and I'm now a fan.
Are you looking for other investors? If private equity is interested, is that someone you're talking to?
We are always looking to build a company with all kind of new partners. It reminds me of that line from Jaws, we're going to need a bigger boat. Anybody who is an investor, a partner, employee, or a media company, we want on our side of MMA, not their side.
All right, good stuff. So who are you rooting for in the fight?
Well, I can't tell you that, but I will tell you there's two homegrowns, Ferreira and Pachenko, and then there's two free agents, Cyborg and Francis. So to me, what's so interesting here is you've got homegrowns against free agents. Either one can win, and I'm not in control. I root for them all.
All right. Well, a lot of attention already on this fight. October 19th, Donn Davis, he is the chairman and founder of the league putting that on, the Professional Fighters League. Scarlett.
All right, we just want to recap what happened in trading today. It was the first trading day of the month and of the fourth quarter, and it was a down day here for equities. It was risk off really across the board, across asset classes. Stocks declined, treasuries rallied, oil prices jumped. You could see crude oil up to $70.72 at the moment here on the escalating tensions in the Middle East after Iran attacked Israel. And of course, gold climbing to a record high of 0.8% at $26.81. This is the close.
We are proud of the actions that we've taken alongside Israel to protect and defend Israel. We have made clear that there will be consequences, severe consequences for this attack, and we will work with Israel to make that the case.
And you were just listening to National Security Advisor Jake Sullivan earlier today, adding that the U.S. will consult with Israel on next steps following Iran's attack. For more, we want to bring in Bloomberg Balance of Power co-hosts Kailey Leinz and Joe Mathieu on this developing story. And guys, it wasn't so long ago that the reporting indicated that the White House had all but given up on any kind of ceasefire between Israel and Hamas. And now we have another front to this war as well. How are you looking for how Washington responds next, Kailey?
Well, it'll be interesting to see to what extent the Biden administration is able to influence Israel's next steps here, because as you allude to, the ceasefire they've been pushing for months now with Hamas, they also, just within the last few weeks, have been pushing for a ceasefire with Hezbollah, a 3-week period. Obviously, that did not happen. Israel, in the last 24 hours, launching a limited ground incursion into Lebanon to combat Hezbollah. Now Iran striking them directly, retaliation we've been expecting for months now. Obviously, the U.S. has reiterated time and again it remains committed to the defense of Israel. We saw that in action again today, just as we did back in April when Iran launched those hundreds of missiles and drones against Israel back then. Largely were intercepted as they were today. But the defense of Israel is one thing. Trying to make sure there's limits on what Israel is doing offensively, not to escalate, is something else.
Well, that's what I'm curious about. And we should point out that Benjamin Netanyahu is speaking right now, saying that Iran made a big mistake tonight and will pay for it. His words, not mine. We also heard from the president saying that he planned to speak with Netanyahu at some point today. How much sway does the Biden administration have over the Netanyahu administration?
That's a real question right now, as Kailey was alluding. Look, we've seen Joe Biden walk up to the line repeatedly with the idea of a ceasefire with Hamas. We know that the phone calls have been made. We know that Anthony Blinken has made 10 trips, Romaine, since October 7th to the region. Lloyd Austin has gotten involved. The head of the CIA has been involved. Yet this is still happening today. So I think the idea of influence is one that should be questioned right now and is likely going to creep into this vice presidential debate tonight. You're hearing Republicans. Kailey and I had a couple of conversations on the air today with Republicans saying this would not have happened if Donald Trump were in office.
Who's the point person in the Biden White House on this?
Well, Jake Sullivan, the national security advisor, obviously has been engaged. Bill Burns, as Joe was mentioning, the director of the CIA, has been involved in a lot of the ceasefire talks, serving in kind of mediating capacity. There's also Amos Hochstein, who has been somewhat of an envoy to the Middle East, given his deep connections there. There's many different players in this game. None of them, though, have been able to solicit the kind of responses they would like to from all those at the table. And that doesn't just go for Israel. There's, of course, other sides of these negotiations, Hamas and Hezbollah, respectively.
I want to ask you guys about the VP debate in a second, because that's, I guess, just why you're here in New York and not in your cage down in D.C. But before we get to that, we did have a port strike that started today here. Yes. And there's been a lot of discussion as to whether we would see any type of federal intervention, which would kind of be tricky for a president and Joe Biden, who has really staked his reputation on supporting unions.
That's right. Look, he could have triggered Taft-Hartley and had an 80-day cooling off period that would have brought this well beyond the election and not made it an issue for November. But he said he wouldn't do this, even though they just stopped the rail strike 2 years ago using a similar but different law here. So it's an interesting move from this White House as Kamala Harris tries to carry this mantle of being the most union-friendly administration in history. Donald Trump's appealing to organized labor now as well. So imagine a world in which he's trying like heck. That doesn't
successfully?
Well, look, a lot of rank and file in the United Auto Workers voted for him in 20 and probably will again now. The Teamsters, remember, spoke at the RNC. So you're going to have a stock worker strike and a Boeing strike underway when voters hit the polls.
Have you heard
it's
from
pretty
Donald
interesting.
lately? It's like, what's he up to?
What's that?
Okay, never mind.
I've got to ask, in terms of how the administration pivots to, not playing a role in this strike when Republicans are pushing for the White House to do something more. I mean, what they want is for Biden to jump in and invoke Taft-Hartley.
Yeah, that's right. And we saw a letter to the administration coming from the House Transportation Committee. Its chairman, Congressman Graves, pushing the administration to intervene. But what you heard from the press secretary, Karine Jean-Pierre, was just this afternoon, was they want to see collective bargaining work to resolve this. This is a pro-union administration. They don't want to put that on labor when they have been so in favor of labor. But Mike Johnson, the Speaker of the House as well, who's actually here in New York speaking at the New York Stock Exchange this afternoon, put out a statement this morning accusing the administration of inflicting more economic pain on Americans because of the way in which this could snarl supply chains.
I just want to point out to our viewers right now, we're also getting comments right now from Vice President Kamala Harris saying that she fully supports the order to shoot down Iranian missiles, giving her remarks about the Mideast conflict. Of course, these remarks come just a few hours away from a big vice presidential debate that won't involve her. It will involve Tim Walz, her running mate, and of course, J.D. Vance. Both of you are here. Now, I'm told neither one of you are moderating, but you're still here in New York.
CBS.
Give us a sense here as to what to expect, because I'm always told that vice presidential debates don't actually matter.
Yeah.
But they're saying that this time is different.
Well, Donald Trump told you the vice president doesn't matter, period. So look,
how did J.D. Vance feel about that?
I'm not sure he enjoyed that, but this is a big night for both of them. And it's different, I think, in one respect, not only the cross currents that we've already identified at the table here. This is a wild news cycle that we're in the throes of for this debate, but it's going to be the last word. There's no next presidential debate.
Unless someone changes their mind.
Well, I guess that's possible. It's probably not that likely right now. So these running mates are carrying a lot of water for their bosses. This is essentially the closing argument here.
Kailey, just real quickly, I mean, what are you expecting tonight?
Well, it could be a lot of fireworks, keeping in mind the rules for this one are different. Unlike the muted mics when it's not your turn to speak that we saw in the Biden-Trump debate and then the Harris-Trump debate, the mics will be hot for all 90 minutes. And the moderators this time around, Nora O'Donnell and Margaret Brennan, have said they will not be fact-checking. We did see a bit of fact-checking in the ABC debate. The network took a lot of flack for only targeting fact-checks at Donald Trump, not Kamala Harris. So they are leaving that up to the candidates tonight. And it'll be interesting to gauge how each of them tries to hold each other to the truth.
All right, we're going to let you guys get to work here. You got a long and busy night up ahead here. Bloomberg Balance of Power co-host Kailey Leinz and Joe Mathieu. Of course, two of the best in the business. And of course, the best coverage that you're going to find of that debate comes later tonight. Of course, it will be aired on CBS News as well as right here on Bloomberg Television. That starts at 8 p.m. Eastern Time right here on Bloomberg. Tim Walz and J.D. Vance face-to-face in what could be the final debate for any of the major candidates here in this election cycle. We continue the conversation right now with Andy Blocker. He is the global head of public policy over at Invesco, also in New York. This is quite the draw, apparently. Everyone's coming to New York for this debate here, although we're told there won't be an audience. I am curious about, how do I put this delicately? This is an election right now that is focused so much on the polling between Harris and Trump. I am curious about the polling between Walz and Vance and whether the disparity that we're seeing there is going to matter.
So first of all, thanks for having me follow Joe and Kailey. That's really great. But I think, first of all, Vance is underwater significantly and Walz is above water. So I'm not sure if it makes a difference in the end, but definitely up until this debate, Vance has been more of a drag on the party and Walz has been not a negative.
There was a lot of criticism out of the presidential debate between Harris and Trump that there wasn't a lot of specifics on policy. Are we going to hear more specifics tonight, or do you think the candidates are going to just stick to those broad strokes? Here's my story.
So I think you could see a little bit of both. Mm-hmm. I think Walter's job is a little bit harder because he's kind of above water right now. Mm-hmm. Can he maintain that? So he's going to try to be the adult in the room, talk about things that are affecting the American people to the specificity as much as Kamala's done. And then I think Vance has an easier job. His job is to attack. And so to the extent that Waltz is able to both tell his story, but parry those attacks and attack back, I think that'll be the defining.
And as Kailey was telling us, there's not going to be any fact-checking in this debate, unlike what we saw in the Trump-Harris debate. So given the kinds of stories that J.D. Vance has been telling about pets in Springfield, Ohio, this could get, I feel like, out of hand very quickly.
Yeah, the dogs and the cats, right?
Yeah.
There'll be a lot of dogs and cat stories. So look, I think there'll be a little bit of that. There'll be a little bit of roughhousing, I think, back and forth. But each side has some really good material to use on the other. So, look, but I think for the middle voter, it's going to be who's kind of talking about the issues that matter to them. But then for those low propensity voters, I think Trump's going after, the more Vance ratchets it up, he may be able to reach them.
I mean, ultimately, this election will rest on a couple of states and a couple of districts within a couple of states. So when it comes to issues of the economy and policy, what's likely, what will Vance want to bring up and what will Walz want to bring up?
Well, I think Vance wants to bring Waltz down a notch. And
so bring down rather than bring up.
Yeah. I mean, he's going to try to attack him, go after some of his statements in the past and kind of pierce through that authenticity that he he's the Midwestern nice guy, pierce through that.
Coach dad.
Yeah, so he's going to try to do that, bring him down, but I think at the end of the day, for the middle voter, they're going to want to hear about things for them. But for the partisan voter, they're going to want you to take it to the other guy. So they both have that job to do.
This may be a dumb question. Are there a lot of undecided voters out there at this stage in this election cycle with these two candidates?
I think there's some people who may have decided but don't want to tell you and me.
Okay. And I ask that because I do wonder how much this is going to sway things. I mean, unless, one of the other candidates tonight really just does something dramatically obscene, it's just hard to think that this is going to really move the needle. I mean, I know there's typically that post-debate bump, at least we see that in the presidential debates cycle. Is that also going to be true potentially for the VP debate as well?
Yeah, look, I think the most this will do is either energize your base to get out and actually motivate them to volunteer, get other people about to vote, or it'll discourage them.
Yeah.
So you don't want to lose it, number one. And at the end of the day, this is hand-to-hand combat in the states, and the ground game is what counts.
You look at a lot of polls. Which ones are most informative to you? Which do you pay attention to in terms of telling you the movements and things are actually happening under the surface?
I love all my polls, But I think, look, I don't think we should focus on one poll. I think really I like to do average of polls, and I look at trends because any snapshot's going to be off. We undercount Trump in the past. We've undercounted Democrats since Roe v. Wade. So it's not about that. It's what's the direction of travel, and then it's the hidden ground game in each state, I think, which ultimately counts.
And just one final question, though, too. And this is on J.D. Vance. I don't want to pick on him too much, but he's had a little bit of a rough go since he was nominated. Who's he speaking to tonight? Is he going to be speaking to the people, or is he going to be speaking to Mr. Donald Trump?
Well, Donald Trump's his boss, so he's going to be speaking to him. But I think he's also going to try to do what all of the campaign team wants him to do, which is stay focused on the economy and immigration. And so he's going to throw in a little bit of the punches and things like that. But at the end of the day, he's going to try to be focused on those two issues.
All right, Andy. Great stuff. Great to have you here. Of course, it's going to be a busy night for everyone. Andy Blocker is the global head of public policy over at Invesco. A nice preview here of the big VP debate tonight between J.D. Vance and Tim Walz. Coverage starts right here on Bloomberg Television at 8 p.m. tonight. But stick around right here on The Close. We're going to set you up for some of the potential market moving events over the next 24 hours. This is Bloomberg. All right, let's push ahead to some of the potential market-moving events over the next 24 hours. And we start in the morning, Scarlett, with some more earnings.
Yeah, ConAgra and Levi Strauss will both be reporting, but this is really the tail end of the earnings season.
Absolutely. Though Levi, interesting story, interesting turnaround story, if you will. And I don't know if you saw that new ad campaign they have with Beyonce here. I don't know if that's going to goose sales or not here, but it'll be interesting to see what they have to say about that tomorrow. And of course, the drumbeat to the jobs report starts tomorrow morning as well.
Yeah, ADP employment comes on the heels of the job openings. The JOLTS report today, which was surprising because it showed job openings are at a 3-month high.
Yeah, at a 3-month high. So I don't know. I never know what to make of this. I mean, we always sort of obsess over JOLTS and ADP, and then once we get the official monthly report out of the government, then of course there's no correlation whatsoever. We also get mortgage applications, and this could actually be interesting too. We've been talking a lot about some of what's been ailing the auto sector. We're going to get Tesla deliveries tomorrow, but the expectations are actually relatively high.
They are, and part of that might be because there's been a lot of concern about Tesla that's priced into the stock, but also it's got robo-taxi day on October 10th, so they want a good tailwind heading into that
event. Is this going to be a real robo-taxi or just a guy in a car suit?
It's going to be an Elliot Musk version of a robo-taxi day.
All right, and Scarlett, your favorite, Fed Speak tomorrow.
Oh, lots of Fed Speak, yeah. Lots to choose from. Beth Hammack, Alberto Musalem, Michelle Bowman, Tom Barkin. Can't wait. Who?
All right, if it ain't Jay Powell, I ain't watching, but we will have full coverage. Please watch us tomorrow. We'll be back then. In the meantime, stick around. Balance of Power coming up next at the top of the hour on Bloomberg.